Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. And as every weekend, I want to give you my weekly update for my real money portfolio for week 2 of 2022. And yeah, the road of 2022 just begun, and so now we are in week 2, and today I will show you what I did in week 2, what I bought, what I sold, which dividends came in, and what performance overall I have with this real money portfolio. So this was really a busy week. I really bought a lot, sold something, got some dividends, made some research. So a really busy week. But before we start, don't forget to subscribe to my little channel, ring the notification bell to never miss another video, and then you get every weekend update on my real money portfolio with all the transactions I did, and also once a week a full analysis of a value stock. And if you like that, and if you want to support me, because this really needs a lot of time, a lot of effort to analyze all these businesses, to put together these videos, then you can support me via PayPal at Investing for Generation. Thank you. So let's start with the transactions of last week. So overall, the market dipped since the start of 2022, at least a little bit. The S&P 500 is down around 3% since the start of the year, so it's really just a little dip. It's not a big sell-off crash or not even a correction. But of course, some of the stocks, especially the hyped tech stocks, really fall from heaven. And so also for me, it seemed like there are some chances in the market where also some very good, very valued companies came back a lot. And so I start to buy last week. New to my portfolio is Dick's Sporting Goods, a company with a market capitalization of $9.643 billion, a PE ratio of 8.56, and a dividend yield of 1.54%. I bought Dick's Sporting Goods at January 10th. I bought 18 shares for $106.88, and so my position already is up 4.27%, at least a little bit, and it's also a small position, of course, in my portfolio. I made a deeper analysis last week about Dick's Sporting Goods. Check this out, and then you will know why I think this could be a very good, very great investment over the long run, why I like this business so much. And so now I just decided, after it dipped a little bit, to buy in. Then I bought Medifast, a company who sell weight loss, weight management, and healthy products. And this was also kind of a high flyer, and now it came back to prices around $200, have a market capitalization of 2.362 billion with a PE ratio of 15 and a forward dividend yield of 2.8%. And I bought into Medifast also on the 10th of January. I bought 11 shares for $198.21, and then also one day later on January 11, I bought 4 more shares for $197.05. And so overall, I have now 15 shares of Medifast, and also this position is already up to 0.76%. And by the way, Medifast was really one of the companies which was on my watch list for a while and was just too expensive. Here on the chart we see it peaked around $330, and then now it's just back around $200, and I think it could be a good time to invest. And also a very good company, very solid financial numbers, just as I like it. And of course also a nice, relatively high dividend yield. Then I bought into T. Rowe Price Group, also another company I had on my watch list for really a long time, and it's now traded around $175 with a market capitalization of around $40 billion, a PE ratio of 13, and a forward dividend yield of 2.44%. T. Rowe Price Group is an investment manager, provides the services to individuals, institutional investors, retirement plans, financial intermediaries, and institutions. was founded in 1937 and is really a big player in money management. I bought my shares of T. Rowe Price on January 12th. I bought 18 shares for $182.83, and this position is down 4.61% now because it just dipped more and more. Everything's fine. If it dips more, then I will just add to my position, because right now it's also quite a small position, and this is really a great company with great financial numbers, very, very healthy, with a good dividend history. I'm quite sure I will hold T. Rowe Price for the very long term. I made a video about T. Rowe Price long time ago, over a year ago. I analyzed this business and put it on my watch list, and now I found a way to buy for me a reasonable price into T. Rowe. Then I bought a company from Germany. As I said last week, I will over time just close my German or European portfolio. I have this extra right now in another account, and just put everything together on this one account I talk here about on this YouTube channel. And so I bought Heidelberg Cement to my portfolio, a company, as I said, from Germany, with a market capitalization of 12.9 billion, a P ratio of 7.37, and a forward dividend yield of 3.43%. And I bought my shares yesterday on January 14th. I bought 42 shares for €65.19, and so nothing happened here with this position right now. So Heidelberg Cement, very, very solid company, which seems pretty cheap, of course, also with a very nice dividend yield. So I decided to buy in. I think this could be a very solid basis investment for the long term. Then I also added to some positions. First of all, I added to my position in MI Homes, because MI Homes also dipped last week quite a bit, and I bought 20 more shares on January 10th for $54.71, and since then the share just went up again over $58 right now. And so overall I have 173 shares of MI Homes for purchase value of $10,616, and I'm down with this position 5.25%. And also for MI Homes, as for every other business in my portfolio, I made a deeper full analysis. You find this on my channel, and then you will understand why I like MI Homes so much and why I add over time and think this will be a great investment over the long run. Then I added to Meta, or Facebook, because also Facebook dipped again. I bought on January 10th 4 more shares for $317.65, and now I own 40 shares of Meta for a purchase price in average of $294.43, and I'm up with the whole position 15.42%. And Meta also is my biggest position in my portfolio, and so I use every dip to just add to this very great company. Then I bought more shares also of PayPal. Also on January 10th, this was really my shopping day, the Monday, I bought 8 more shares of PayPal for $178.61, and so I own now 33 shares of PayPal for a purchase price in average of $184.42, and I'm down with the whole position 4.57%. Also here, I think PayPal will be a great investment over the long run. Also here I made a deeper analysis, a full analysis of PayPal, and explained why I bought in the first place. Then I also sold some shares, and maybe surprisingly I decided to sell some shares of Berkshire Hathaway. I had 28 shares of Berkshire Hathaway, and so I decided to sell on January 11th 18 shares of Berkshire Hathaway for $318.49. And the reason I sold is that expected return of investment for Berkshire Hathaway after this big run from under 180 to now 320. Just mean that the expected return for the future is low. If I calculate the intrinsic value, I come to a expected return for the future of, let's say, around 6%. And that's still good, but I think there are better chances in the market. And so I decided to sell these 18 shares. This equals the money I invested in the first place. And so now just my gains run here with this 10 shares left in Berkshire Hathaway. And I didn't want to sell the whole position because I really like to be invested in Berkshire Hathaway. It's a great basis investment, and I'm quite sure in the next dip, in the next correction crash, I will add again to Berkshire Hathaway because over the long run, it's maybe the best investment you can have in the stock market. Right now, just the expected return was too low for me, and so I think there are better places, better chances in the market. This was the reason I sold at least the money I purchased in the first place. Then I received some dividends. First of all, I received $28.92 from Leggett & Platt, and then I also received $4.42 from Progressive Insurance, and so at least a little bit of cash flow also into my portfolio. Then I was also able to deposit more money into my account of this portfolio because, as I said before, I want to focus on one account, and so over time I close my European German portfolio, which I have with Comdirect in an account, and then transfer everything to Interactive Brokers, where I have this portfolio I talk here on YouTube about. And so in my European German portfolio, I sold SAP and received $3,238 when I sold that. I had a gain of around 10% there. Not that good, not that bad, at least. I just decided to sell SAP because nothing really happened there, and so I lost a little bit of patience with SAP, and I think there are better chances in the market, and so I decided to sell and then transfer this $3,238 to my Interactive Brokers account and to the portfolio I talk here about. So, and after all these transactions and deposit, then my whole portfolio now look like that. I still have a big cash position of 28.68%. Then, of course, a lot of new businesses added up here on this pie with Dix, with Midifast, with Tiro, with Heidelberg Cement, and so on. And still the biggest position in my portfolio is Facebook, as I said, or Meta, followed by MI Homes, Intel, Alibaba and Tencent, and so on. That's the current pie of my portfolio. And when we look at the performance of every single stock in my portfolio since the start of the 2nd of December 2019, when I started this portfolio, then we see that the Bank of Nova Scotia, or Scotiabank, is the best performing stock with 96% up, followed by Coca-Cola, JP Morgan, Berkshire Hathaway, Leggett & Platt, and so on. And at the end, as every week, the two Chinese stocks, Alibaba and Tencent, even if they recovered a little bit over the last few weeks, but still down in the minus, especially Alibaba, still 32% in the minus. But as I said so often here on this channel, I will just hold for the long term, and I think the market will realize that this is just irrational. Then also take a look at the closed trades I did, and then you see the best trade was with Imperial Oil, 120% of gain, Caterpillar, Walt Disney, Stamps.com, and then also Berkshire with 67.91% on the original purchase, and also very good. And as I explained, now I just sold my initial investment, and so I stay just with the gains I did so far. Then take a look at the performance overall of this portfolio. And first of all, take a look at the performance in 2022. Of course, as a second week, nothing much to say about. I just want to continue that I also see how is the performance in the current year. And in 2022, my portfolio gained 2.73% compared to the S&P 500, which has a minus of 2.17% since the start of 2022. More important, the performance overall since the start of this portfolio at the 2nd of December 2019, and since then my portfolio have a performance of 64.67%, which is the outperformance to the S&P 500 of around 15% and to the Dow Jones Industrial Average of around 35%. Very good. I'm very happy about that. I will just continue and try to find good businesses, value businesses, profitable businesses. That's a very important point to me. I always only invest in profitable businesses, healthy businesses, and then try to buy them for a reasonable price. That's the whole goal, and so I will stick with that. And if you want to follow me on this road as a long-term value investor, then just subscribe, ring the notification bell, and then we will see once or twice a week. And next week I will just continue with more analysis of value stocks. Maybe you know, right now I look through a lot of small cap stocks, around 2,000 small cap stocks, and there I also found Dick's Sporting Goods, for example. And last week I also made a video about a very interesting company, Edcore. Check also this video out. This is also very interesting company. And then yesterday when I researched more and more, I also found another very interesting company, and I will make a video, I guess, on Wednesday about that. And there is another very good company which seems undervalued to me. So this is a goal for next week, and then of course next weekend also again the weekly update on my real money portfolio. Thanks for watching, and if you liked the video, give a big thumbs up. If you want to support me, you can do that via PayPal at Investing for Generation. Thanks for that. This really helps me because I really have to invest a lot of time for all this research and filming these videos. So that's it for today. See you the next time. Take care. Bye bye.